Stocks are trading next to records. However, there is a small bearish divergence between S&P 500 and high-yield bonds. How concerning this is, we'll try to figure out. Gold is attempting to hold support. At the same time, dollar is attempting to break out. Which one should we trust? I really want your opinion on this one. And Bitcoin could be topping at least temporarily, so I actually took profits on my position. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, January 12, 2024. As always, please keep those likes, those comments, and the shares going. And if you have any questions, please, ask it in the comments below. This is what keeps this channel going. Thank you very much for them. If you are a subscriber, stay tuned. We have quite a bit of interesting setups to cover in the members only video. Crude oil and natural gas, aka the Widowmaker, is covered in the members only video. Natural gas, it's one of the most volatile securities known to people, to humans. That is why it's called the Widowmaker, because it's so difficult to trade. We have quite a bit of various ETFs, large cap stocks. Tesla is an interesting setup. Some of the psychedelic stocks, ATAI, Compass Pathways, and a new addition by a subscriber, MindMed, as well as several of the various securities that are considered speculative, such as C4 Therapeutics, Opendoor Technologies, Solid Biosciences, as well as Palantir. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com. I will be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart. There's this green, blue, red, and yellow lines. They are available for TradingView.com. This is a TradingView.com interface. Once you sign up on TradingView, it's a free TradingView account. Sign up on my site and I will open the door for you so you can see them on your chart. Let's get started. We're currently looking at S&P 500 on daily time frame. So I'm still long. This is actually my entry right here. I entered somewhere, I think I entered here on the 23rd of October. I'll show you my actual position. SPY, S&P 500, ETF SPY. I bought here on Monday the 23rd of October, or 24th of October actually. And so far it's pretty good. It's about, it's very good. I really can't complain. I'm personally about 14% up. Our S&P 500 is very close to all-time highs. So on this chart, this is a weekly chart, just means that each candlestick is a week's worth of activity. So there's the previous record all-time high on January 3rd, 2022. And now we are again very close to those all-time highs with dividends. So notice this is ETF SPY. We are actually already at record highs. Okay, so it's a previous high. If I uncheck, see where it says ADJ on the right here. ADJ means adjusted for dividends. So if I uncheck that, then we're not yet at all-time highs. However, if I do include the dividends into the price, we're actually, let me see, a few percentage points above previous records. So we're about almost 3% above previous records with dividends, which makes sense because that's about how much S&P 500 pays. So for now, I am holding. I actually haven't even taken any profits yet. I usually take profits when the security, so we're surging, right? We surged, and then we're gonna come down towards this green line and touch it. So usually I take profits around there when we come down and touch the green line. But we haven't actually even done that, and we could just break to new all-time highs, just kind of continue higher. We can see another short squeeze when when we push towards new records, and previous short sellers, short stops, are going to be forced to cover at new records. So for now, not that many changes. This is a new 52-week high. It's not an all-time high. However, we did clear this previous high from 28th of December, and now we have a new 52-week high, and we're very close to record. So overall, no change. Obviously, we're in a bull market, and so far, I don't see any signs. Well, in a second, I'll show you one little tiny sign that there might be a possibility of a pullback. So right now, we're looking at that little tiny sign, and that is JNK, high yield bonds. So high yield bonds, generally speaking, correlate or move together in lockstep with S&P 500. So on this chart, this is a weekly junk debt, high yield bonds, and down below here we have yellow. It's called correlation coefficient. It's a correlation to S&P 500. You can see that right this instant we have 97% correlation. So it's pretty much doing the same thing. And it's important to look at high yield bonds, junk debt, when we're also trading S&P 500. If there is a significant divergence, then we should be worried. But for now, the divergence is actually very, very small. So this is the divergence I'm referring to. It's very, very tiny. All right. Whereas S&P 500, this is SPX, just made a marginal 52-week high and is pushing towards all-time. The high yield bonds hasn't yet made a new 52-week high, but we're so close. We're literally like not even percentage away. So I don't know if I should worry about. I'm not terribly worried about this right now. If it was something a lot more significant where, high yield bonds are just lagging badly, I would be more worried. But for now, I am not that worried. It's something to look at and something to consider. But for now, let's just kind of keep it as a distant reminder that we have potential pullback coming up. But for now, S&P 500 next to records at 52-week records. So not a bad situation, to tell you the truth. And this is despite a very precarious worldwide situation. I have not lived through the Cuban Missile Crisis or the Vietnam War. I wasn't born yet, but I was born in the mid-70s, and for me in my adult life, the current situation with a war going on in Ukraine, a war going on in Israel, and big instability going on all around Middle East, to me this is probably the most unstable and very uncomfortable time to live in. Things are very uncomfortable to me because the way things could be going, we could be headed towards a new major war unless some sort of a cooler heads will prevail, and I am really hoping for that. So let's hope cooler heads will prevail. Looking at dollar DXY, dollar currency index. So on this chart, you can see that my indicators, you can see they're kind of got closer together. So they were pretty widely apart here back in, let's say, September or even as early as October of last year. And then they kind of got close together. And we had a breakout of a dollar index into a new uptrend here on the 26th of October. However, we pretty much lost all of it and then some, and actually re-entered back into a downtrend where I'm hovering right there on the 14th of December and moved lower. So what's happening right now is if we take this picture at face value, we should be selling short right this instant. Okay, there were multiple triggers right here from 3rd of January until today. So basically every single day it was a trigger. We have a high above the red line, a close below it. High above, close below. So pretty much every single day for 1, 2, 3, 4, 5, 6, 7, 8 days so far, 8 trading days. We've been signaling that we should be selling short. We should be selling short. Dollar is about to collapse, but it's not collapsing. So there is a saying. It's a pretty retarded saying. Forgive me for saying that word, retarded. Pretty kind of weird and I don't know, very large statement that what doesn't go down will go up, and vice versa. What doesn't go up will go down. So dollar is not going down. So I have a feeling we're about to break out. That's why I wrote here attempting to break out. So if dollar breaks higher, then commodities, especially gold, silver, will come under more pressure. Okay, why? All right, again, so XAU divided by USD. So I just showed you dollar, which could be strengthening. So this bottom part of this equation, XAU divided by USD, could be about to get bigger, fatter. It will, by extension, pull this currency pair lower. Okay. XAU divided by USD, bottom part of the equation got bigger, it will pull this currency pair lower. So that's why I have this line going down with a question mark. Will gold succumb to strengthening dollar? Potentially strengthening dollar. We haven't yet, gotten a clear breakout above this resistance at the red line, and definitely we haven't gotten a actual re-entry into a bull market. Okay, so this is why I am very reluctant to trade gold right now, even though gold is giving us a bullish signal. Additionally, the reason why I'm reluctant to trade gold is because of this very large potential rejection candlestick on the 4th of December. It has all of the hallmarks of rejection. We have a very large tail out of the top. This is a shadow. It's a red candlestick, and it's a very large red candlestick with close significantly lower than the open, and close next to the end of the session. So this is a very bearish candlestick. So I'm sort of reluctant to be buying gold right now in light of a potential strengthening of a dollar. Am I overthinking this? Make a comment. I could be really just overthinking this, and we should just, forget about everything and just buy the gold. All right. So what do you guys think? Should we just be buying the gold and forget about the dollar potential for strengthening? Or does my analysis kind of make sense and we should be a little bit cautious about gold actually moving lower? I'd like to know your opinion, so please make a comment. And Bitcoin, I want to wrap up today with Bitcoin. I wanted to show you my position. It is a very good position. I was very happy when I bought it. As always, I simply follow the indicator lines. Okay, so why did I buy Bitcoin? Is because it triggered my signal. There was a signal. What's my signal? The signal is the price was already above the blue line. Okay, so let me just go back a little bit, and there's the initial breakout into a new uptrend. So up until February 15th of 2023, last year, so almost a year ago, you can see that the Bitcoin was really down below here and making new lows. It was below this yellow line, and then suddenly something happened. We started moving higher, broke above the red line right there on the 20th of January 2023, traded sideways. Notice the way the indicators curved down, which made it very easy for the price to move higher, and price took advantage of it. So the breakout occurred here on 15th of February, and then we had opportunities to buy. We need to see a move below the blue line. Okay, there's the blue line. Okay, the price moved below it and then closed above it. So there was the first signal on the 12th of March of 2023 to buy Bitcoin, and it was successful. Another signal, it's pretty obvious right there. We had a low below the blue line on the 14th of June 2023, and then a close above it on the same day. Well, actually, it's a 2-day pattern. That's all I need to know. We buy. Another opportunity, we had a close or a low below the blue line and multiple signals. So I actually bought myself on the 23rd of August 2023, and I was sitting in a position, again doing nothing, until I figured I think we're about to go even higher, and I actually doubled my position in Bitcoin here on October 5th 2023. And it was a good lucky break, because literally a week later it skyrocketed. It popped really higher significantly. My average position was around 27,000 price. It went up as high as let me see, high of 49. So very nice move. Obviously you cannot, one cannot exit exactly at the top, but the top was around 80% higher than the entry. Now I took profits on the 5th of December at a nice on about a quarter of my position, and then I continued holding until today. Actually today I took profits again. I sold another quarter of my position. Why is this? Why am I a little bit worried about Bitcoin? Let me show you. I'm going to zoom in on this price action. So up until, starting from like December 5th, where I'm hovering, until literally, like January 10th. So all of this time, like, 2 months almost, it basically did nothing but move sideways until right there on the 11th of January. It moved higher, and then notice the really large shadow at the top and a red candle and a close below the open, a shooting star candlestick. Okay, and then today, or on Friday, this is already technically Saturday candle that's being printed, because it's a 24-hour security. But yesterday, on Friday the 12th of January 2024, very large red candlestick with a very pronounced close below this green line. Okay, notice there was not, there was a close right there, but it was not nearly as pronounced. So today's action doesn't look that great, and let me just show it to you on weekly chart as well. And on weekly chart it actually looks worse. So there's the entire sort of history of this Bitcoin breakout. So notice this candlestick, the last candlestick, it's pretty much a shooting star candlestick. So shooting stars are usually signs of topping patterns, rejection of higher prices. So price came up, bulls were very happy, and then price came down, and actually we're closing at near the below the open, so candle is red. So shooting star candlestick implies a potential topping pattern. I took already profits, but my stop for the entire position is very close at the blue line. So I trail at the blue line, so I'm about 6% away from exit right now, complete exit on Bitcoin. Then we'll reassess and see what happens. It's a big move, so we need to kind of pause and see what happens. It doesn't mean Bitcoin will collapse. It means that we could be trading sideways to down. Will it enter a new bear market? We're about to find out, but I don't see it right this instant. I think it's just a garden variety pullback. What do you guys think? Is this a garden variety pullback or potentially a end of the bull market for Bitcoin? That's it for this week's recap. Head over to MasterChartsTrading.com. Click on sign up for one of the products. So again, I have trading indicators. These are these lines in the chart, which you can trade pretty much anything on pretty much any time frame. So just to illustrate, here's a 5-second chart of Bitcoin, and this is a live chart. Okay, so you can kind of see that at this point we should be buying Bitcoin. So let's see by the time I finish the video, well, where will we get? But this is how it works. So those are the trading indicators. You can pretty much trade anything you want on pretty much any time frame, like for example daily, hourly, or weekly. You just need to adjust and it's very easy. You can just adjust the parameters. Newsletters, so I send out daily alerts and weekly members only video for various securities that we trade. For example, this week we have been trading crude oil, natural gas, aka the Widowmaker, various ETFs, large cap stocks, as well as some of the speculative stocks such as Groupon, and then Gritstone, very interesting pattern. Gritstone, Opendoor Tech, also very interesting pattern. So stay tuned for that as a separate video. And of course, the best deal is to get both trading indicators and newsletters at $59.95 per month. It's a very good deal. I'm also adding the monthly subscriptions, and if you need it right now, it's $49.95 per month for the yearly subscription if you sign up for the year. All right, that's it for this week's recap. Let me know if you have any questions. Otherwise, thank you for watching and have another great trading week. Bye-bye.